All right, so we are here and somewhat live, I guess. We're not going to edit too much out of this. This is a Halyard Group production with myself, Chris Cook, the lead agent, the team lead for Remax Hallmark, the Halyard Group, together with Dave Bayless, you just joined the Halyard Group about just a little bit over a month ago, but coming from 22 years of working in the pre-construction industry, a very welcome member to our team because I think you bring a level of expertise and knowledge that we really didn't have. I've always steered clear of working in the pre-construction and new construction space, mostly because I think it's important that we have a level of expertise in what we do. And there's a certain bandwidth that I have to being able to handle just the resale stuff that we do. So really glad to have you join the team, Dave, and some of the conversations that we've been having over the last month, just around pre-construction, what that means, some of the stuff that has recently just been announced in proposal, but some of the stuff is actually, I believe, the trigger's been pulled on the HSC. So what we're going to be talking about here today, we're going to do a little bit of a long form discussion so that we can really dive into it and give some perspective to all the people that have been following along with our weekly email, as well as some of the social media posts that we've been doing, and to give some color to an area that I'm coming into this with not a lot of knowledge. I've done my research on it, but Dave, you're the expert in all things pre-construction, new sales, and some of the government legislations that have come over the last 20 years, where we are and where we're going. Let's dive in. Give us a little bit of a highlight of what we're looking at here with development charges, HST, bailouts. Give us the highlights.
Happy to be here. Thanks for the intro, Chris. I will say that although both positions require a real estate license, they're quite segregated. So not knowing a lot about the new home side when you focus and specialize in resale and vice versa is quite relevant. Happy to give my thoughts on the new news, which is coming pretty rapidly as far as changes to the pre-construction purchasing process. There are three major initiatives or proposals that are either in the process of approval or have fully been approved. And one, arguably the most in the clear in approvals and possibly most significant, are the changes to the HST rebate component of a purchase. So any new condo or home being purchased from a developer would have a portion of the HST built into the price and a portion that was subject to rebate. And in the past, that rebate was achievable for end users. If you were going to buy a property to live in, a portion of that HST would come back to you. Or if you were an investor with the intent to rent, once you had a lease signed for the term of a year, you would be able to get that rebate as well. The key change.
What was the rebate before? Was it capped at 18,000?
It was 24. So
Okay.
24 would almost be the minimum and max in almost all cases for price points. And of course, these were rebates that you had to go after the fact. So you were paying the higher purchase prices and amortizing the higher purchase prices. And on that note, one of the initiatives they're implicating is to allow developers to recoup the rebate, which can then allow them to reduce the price initially. And the buyer can just simply pay the lower rebated price and let the developer handle going after that rebate from the government. So that alone,
cost, right? Like when I did my HST rebate, I think I paid somebody like $6,000 or something like that. That's, I think, why I thought it was 18,000, because that's actually what I got after I paid the fee.
sorry to hear that, Chris.
I didn't want to navigate it and I didn't want to get it wrong because it's something.
It's complicated. It's purposely made complicated. It's like most of these rebate initiatives, when they're put in place, they're popular, but afterwards they'd like to do nothing more than not pay you back.
Right,
So,
of course, yeah.
but right now it's become obviously imperative that they do something to help this industry, which has been struggling. But I think the biggest significant change they're talking about, and as of today, essentially green lighting, is to offer the HST rebate that they had recently increased for first-time buyers to all buyers. And the key difference there was the ability to take the rebate right off the price, but also increasing it significantly, removing the federal 5% portion. So what that translates to on homes up to the threshold of 1.85 million, upwards of $130,000 savings. That is significant. On an average unit, your former $24,000 rebate jumps to $50,000. And again, right off the price, so not amortized over 30 years or however many years of your mortgage. So that's definitely a notable difference.
And is that chopped out right from the purchase price? Like you don't have to apply for those rebates or?
That is the new plan. So what to do that, they'll basically give a portion of the agreement allowing the builder to claim the rebate on your behalf, and therefore they can reflect that in the lower purchase price initially.
So if I bought a property, but I intended, what would be the scenario where you wouldn't get the rebate? If I rent it out or if I occupy it myself, what other options are there other than those? Obviously, you could leave it vacant.
In the past, the only way you wouldn't get the rebate is if you flipped within the first year. If you lived in it or rented it for a year, you were entitled to the rebate.
Okay.
So in that regard,
That's
it's
still
not.
the case? Is
Pardon
that
me?
still the case now?
It's still the case. I don't know if they're going to allow it to translate to flippers because I don't think they really ever wanted to instigate more of that. But allowing it to come right off the price opens the door, especially when you're buying pre-construction years out, because not everyone is really sure what they're planning to do with the unit at that time. So if it's being done to spur sales, I imagine in the initial portion at least, it will be left fairly open. It's pretty tough for a sales team 5, 6, 7 years before closing to really suss out what their buyers are planning to do. And then it comes down to them and the lawyers on closing. And at that point, maybe they're not subject to the rebate, but they've already saved significantly in deposit and the overhead leading up to that point.
Okay.
So I think that's going to make a difference. I don't think they're planning on having it full-fledged anytime immediately. I think it's going to be very much weeded to the side of buying years in advance because most of the inventory we're seeing today is already closed and the developer's sitting on it. So the HST is no longer even a factor. So I think what that's doing is trying to motivate sales to shore up our pipeline because we have a looming pipeline issue with the lack of construction starts in the last couple of years.
Okay. Interesting.
Now, moving on to the development charge aspect. So this is something that is essentially, in layman's terms, a tax created to integrate a new home into our society. So it's a one-time fee you pay on closing to purchase or create a new condo or new home. Now, years ago, that was a very small fee, a few $1,000s. To give an example of just how much that has increased, in 2023, that figure was about $29,000 for an average home purchase. And then in 1 year jumped to just under $70,000. Now, that's been positioned as a tax on the wealthy developers, but much like tariffs, for example, the purchasers are bearing at least a portion of that burden. And anyone that you know who bought a pre-construction condo in the last 5 years or so probably had a clause saying they had a cap on how much they would pay towards development levies, but that cap was upwards of $20,000 as of late.
Okay.
They're talking about significant changes to the development levies, deferring them so builders can complete their projects, reducing them, how much has not been determined. To me, it's a little bit of a give and take considering they just recently increased them so dramatically. So it's a little bit of a smoke and mirrors, but it'll really depend on what they do there. If they go aggressive in the rebate or the reduction of those levies, it could again be substantial. But a lot of damage was done when those were implemented and massively increased at a time when interest rates were very high and sales were sluggish to begin with. So that is another big component.
What was this in a response to, do you think? Was this because land transfer tax income had dropped and they needed to find a new revenue source? Is that what you think caused it?
I think that could have contributed to it. I think a lot of it was political posturing because there was this almost organic disdain for all these luxury condos popping up in maybe neighborhoods that shouldn't have had luxury condos, and some way to work against or penalize the wealthy, evil developers as they would have been viewed was easy to just be presented as a higher tax on their bottom line, but they had the ability to offset a lot of that cost to the buyer. So it didn't have the effect that it would have been intended to have. It actually ended up hurting pretty much everyone involved. But at the same time, to put in perspective, per sale, $70,000 tax when you contemplate how many new home sales took place. What an absolute huge money faucet for the municipalities. Very dependent on that money, right? So going a little too far at this point and causing it to just completely stop has really hurt their cash flow. So a lot of that money was being counted on.
So let's rewind the clock here back to the beginning of development in Toronto. I think development charges have been they've been around since the beginning of time, I have to imagine. But the purpose of them was to fund supporting infrastructure for an increased population.
True. And it's interesting on that topic. Only a portion of it really was for that because all these new condos and home sites have to pay for their own garbage removal, their own sewage. Many services the city will refuse to integrate, but yet they have this tax to integrate.
But
Like,
if we're talking about schools, fire stations,
yes,
police
those
force,
elements.
like these are elements that have to be integrated in. If you add thousands of people into a condensed area, there's going to be an additional
Drain on the infrastructure.
for those additional infrastructure things that are carried either by the taxpayer or through these development charges. I think it's which one do you pick? If you had to
Exactly.
pick, I'd be curious, would you rather see higher property taxes or the implementation of these one-off taxes that we're seeing?
I would think the one-offs are better because it's harder to appease someone who's owned a home for 30 years that maybe doesn't want this additional infrastructure to force them to pay for it. But at the same time, I would like to see a little more justification in how we go from 29,000 to 68,000 in a 12-month period. Like what happened? So I think there's a little bit of justification to it, but there's probably quite a lot of overreaching that's taken place there.
Okay. And so you think maybe this is just like the pendulum swung too far in one direction and they're going to have to pull it back because the response has been that land developers are not, or they're choosing not to build. The inflated cost has made unaffordable housing. And I think what ends up happening here is they either push the pendulum back the other way and stimulate some growth in the building sector or backload the problem later when we have a housing crisis.
Yeah. And my worry is that they will choose the latter.
Yeah. I think like it's not all that long ago. We were actually talking about Canada having a housing crisis.
Yeah. And the numbers, now that they've initiated immigration numbers, substantial immigration numbers again, it's back on the table. We need to be creating 40,000 plus new homes every year just to keep up with immigration demand. And that is grinded to a halt. And we've never had the capacity to build much more than that. So it's not like we can make up for lost time 3 years from now. It's inevitable.
I gotta be honest with you. Like I really do question whether or not we have a supply issue. Like I think when people talk about a housing crisis, there's a supply and then there's affordability.
Yeah, and that's the balance, right? How much is too much? Can these condo prices keep appreciating to make buying at over 1,000 a foot viable for investors or even end users? What is the ceiling? And for a while there, it seemed the ceiling's Manhattan, but I don't know that it ever was. There were some elements that jumped the price a little too quickly. And one of those we just discussed, development charges. Another was a massive increase in immigration, which just threw off supply and demand numbers from 200,000 to 500,000. Obviously, the cost or value of that real estate goes up, and it was forced up very quickly. And then the faucet was turned off entirely, and now it's coming back on, but without the foreign students. There's many elements to this that made that machine run. And slowly putting pieces back on the table a little too late, I don't know is going to solve this problem quickly.
Okay.
I
Yeah.
was thinking of an analogy. It feels like someone interrupted our dinner, knocked over the table, and then the next day, just after lunch, put half of the items back on the table and said, "You're welcome." Like it's a little bit too little too late.
Yeah. And I think personally, I don't fault the policymakers to say we have X expenses. Obviously, I wish that they maybe would do an internal audit within all these the government operations, I think could be leaner. They could remove some red tape. They could make it more efficient. It shouldn't take, I'm not going to guess at the number. You would probably have the better number. How long does it take, or has it taken in the past for a developer from the time they purchase a piece of land until they have registered the condo corp?
10 years.
It's a long time to carry debt.
Yeah, and it also with the way costs increase, it's very hard to create a viable pro forma there. Everyone assumes that developers make millions of dollars. They do because their projects are hundreds of millions of dollars, but their margins are actually pretty thin, and there's not a whole lot of room. So when you have to spend 3 years in just the application and approval process, and then try to lock in contracts that are skyrocketing from one quarter to the next, it's there's a lot of stages that could be eased to help promote production of new homes here that are really just on the approval and application level beyond all the other costs that are associated. So
You'd mentioned actually that the developers' margins are thin, and yes, I mean it is
percentage wise,
their thin margin is still a lot of money,
exactly.
but it doesn't take very much. The pendulum swings just a little bit in the wrong direction, and you could go to zero in a hurry.
And that's what I experienced with a lot of the last few projects I worked with. The developers were telling me that 6 months into the sales process, between construction costs increasing and the proposed new development levies, this is no longer really worth our time. And that has continued. And now we're seeing many projects that were already halfway through the sales process converting to purpose-built rentals because of more favorable terms, more favorable financing, more government subsidies. Why can't that be applied to home purchases? There's an idea.
Yeah, I would, being in the industry that we're in, you don't hope for a disastrous outcome. But
Or subsidies.
the housing minister has recently admitted that housing prices do need to come down to match with incomes and affordability by propping these up. And this is like a good segue into the next section of things that we want to talk about is bailouts and offering to buy out these projects to turn them into government operated purpose-built rentals. Does that push our problem down the road?
I think so. I think, again, supply and demand. If you're going to take inventory off the market for whatever purpose, you're limiting supply. I think that the market is cyclical and it has to do what it has to do. There's a lot of manipulation that got us here. So it's hard to say manipulation to fix it isn't needed. But in some regard, causing these projects to crash and even in some cases go into receivership where they're going to be sold off cheap will have probably the bigger impact of bringing prices down, more so than a taxpayer funded buyback program to buy not entire projects, but individual units in existing projects that haven't sold to turn them into purpose-built rental or government assisted rental. I see a world of questions there with how do the investors or buyers in that project feel about that curveball that they weren't expecting to have their building a mix now of low income and high income? How would the taxpayer feel about essentially bailing out developer inventory? Probably not excellent. And to what means, what gain is there to be had if you're simply removing 2,200 units off the market in really the form of a bailout? That's a very new story. That's very hard to find information that doesn't conflict as far as the
Is it being
numbers.
positioned as a bailout though?
It's
Is
definitely
it,
not. It's being positioned as we're going to create affordable rentals. which is a very strong stance to take, but it involves purchasing 2,200 units from builder inventory, which is a godsend for them.
And is
So
that, do you think that's at a profit, or is that just a, hey, we'll get you out of this without any win for you? Is
I
it?
would assume it's not at a profit, but it's still a godsend for developers whose profit is all tied up in that inventory. So even if they have to take a significant lower bottom line, they weren't selling those units anytime soon. So getting them off their books alone is a huge advantage for them, which would then inspire them to start a pipeline for future projects. So there's benefits there. Who pays for this initiative, I think, is one of the big kickers. And that number remains pretty unclear from the articles I've read. I've heard anything from the private investment group being responsible for 6 million and the taxpayers kicking in 300 to 600 million, allowing them to leverage 1.6 billion in purchases. Significant, but filled with question marks.
Yeah.
But all tied to the other news, which makes for some significant news in the new home world.
And that's one of the things that what I- I've always, not always, but certainly for the last 3 years, I've made the connection between these condo sales in general, not just new construction or pre-construction, but condo sales in general, I see as being as the bottleneck that's affecting all other housing assets. We have a lot of people that had purchased condos that were going to use those as a stepping stone to get into freehold properties. And I think we've seen we've seen a huge decrease in buyer activity, but I still see that as pent-up demand. Like the buyers would still be buyers if they could liquidate the assets they have to be able to go into these other.
And to upsize naturally, yes. And the condo, the biggest issue there is when you have choice, you're not interested in sub 500 square feet. You're look fine with 5 to 6, maybe 650. But why are you going to look at the very, very small when there's so much choice? And in the last number of years, the initiative was build as small as possible. So that's where we have the newest inventory being the most challenging, sold at the highest price and the smallest square footage.
Yeah, because if you build a condo, it doesn't matter if you're 500 feet or 5,000 square feet, there's still one kitchen.
Yeah. And if you're an investor and you're going to try to rent a one bedroom, at least in the good times, the smaller and cheaper, the better in their mind, because you're still going to get a market rent, but not when the inventory is flooding MLS and people can pick and choose.
Yeah.
They're just bringing everyone else down.
Yeah, which I guess one of the things that I also wonder about is with the inefficiencies that have been proven within our government operations, is having a government operated rental portfolio going to be necessarily in our best interest as well? Like they're not incentivized to work in a free market.
It's true. I think the proposal for this buyout is handled by a private investment firm. The debatable part is how much are they getting from the government and how much do they have to pay back? And I've seen conflicting figures. One is it's a $300 million loan they have to pay back in 5 years, but that private investment firm can still walk away with significant profit considering they've only had to leverage a small amount of their own money. But at least there's that. At least they'd be responsible. A private company would be responsible for managing the units, but they would be given subsidies to allow for a lower rent.
Maybe a bit of a hot button thing, but what's your personal opinion on? I guess there's two things I would want to know your personal opinion on. I'll give you the easy one first. For purpose-built rentals, do you think it's better long term to have private operation, or do you think it's better for the government to have control over that portfolio?
I would say private operation with government oversight, just because, as I think you were alluding to, the average compensated government employee will not have the same desire or motivation to maximize profitability and efficiency.
Okay.
That's just my take.
How does that translate to the renter?
As far as efficiency goes, getting things mended quicker, issues with the building being attended to faster than if a government agency was handling thousands of properties, how quick they would be able to actually address those concerns versus a private company. So general upkeep of the building, how quick you can get service, how they handle promotions from one building to the next. I think it's something a private company would have the ability to do more targeted neighborhood to neighborhood applicable factors considered.
Do you think, like, I've looked at some case studies from the Netherlands in particular. I think that they've done mixed use very well. And they've done it with a mix, I think, of government operated facilities as well as privately owned. But we've seen, like, there are developments in Den Haag that have 3 million euro penthouse units combined with government subsidized smaller units, but tailored more towards family, 3 bedrooms, that sort of thing. And I think that they've done really well with that because that it does still require a level of upkeep, a standard. So you avoid the like the slum lords and the
Yeah.
problems that they're seeing in New York with some of these buildings where they can't operate at a profit, and so they don't do any of the work.
I think the combination of private and public keeps each other honest as long as they're both involved. So the example you just gave, there's a mix. Whenever you have one, pardon me, whenever you have one party free to roam, they're probably not going to work as tightly. But the other thing you mentioned, the mixture of $3 million penthouses and then maybe government assisted properties, we have seen that work very well here on the Esplanade. That is actually the new mentality moving forward, like away from the Regent Park concentration to a mix. And I quite like it. And I actually probably would be more on board with that kind of model if that was our government.
Okay. You're laughing because I don't think you think we have that kind of government.
It's hard to have the faith, and it is quite personal to me because as I spent a quarter century working in one sec of real estate that, in my opinion, has been decimated by head-shaking policies. So it's hard for me not to have a horse in this race. It is what it is, and people are human, but I think like most scenarios, it's better to be proactive than reactive, and it was a whole lot of reactivity for the last decade.
Okay. If you had control over the policy, having the breadth of experience that you do have, like, what do you see as the solution here?
I think that one of the biggest problems is the lack of international students. And I know this is a tricky one because politically it's a hot topic. It's easy for a politician to want to promote Ontario students getting first crack in schools. There's huge value to that. But at the same time, if you have a GOP that's 70% reliant, pardon me, on new home investment and purchases, and you're going to turn off one of the biggest sources, some hard decisions have to be made there. And certainly going from an overflow filled with loopholes to cut right off is not a wise way to manage anything. It's very reactive. It's very pendulum swinging out of control. So some kind of compromise in that aspect has to be created where we allow at least a portion of what we used to have to come back. I think development levies have to be seriously looked at and analyzed and tried to be made less expensive through increased efficiency. Justify these fees and look at each one of them and find a way to do it more efficient to effectively lower it. And for the time being, let the federal portion of the HST not be applicable on homes when we have a looming home crisis. These are steps in the right direction. I think other things would be to eliminate a lot of red tape for the approvals. This constant, you're approved for 30 stories, but then someone gets 50 and now everyone gets 50. It's very frustrating because then the person who went in for 30 or the company went in for 30 floors, they're back to the drawing board because they can't leave that money on the table. It needs a lot of work, but I think most importantly, it needs attention because it is imperative to our economy.
So what you mentioned something because I like to solve whenever I'm working with an offer, if we're either on the buyer or the seller side, I always like to make sure that we're maximizing the opportunity that isn't money related. So if putting in an offer, we want to make sure that we're lining up with closing dates that makes, that give incentive. I want to make sure that the deposit gives incentive. Like all of these things that don't cost money, let's make sure that we're maximizing that. When I think about pre-construction, when I think about that industry, I've heard, I've got friends that are in the industry as builders. One of their biggest complaints is just how long it takes to even break ground. And those carrying costs also get passed on to the buyers. The cost to do these things. Why is that process as slow as it is?
A lot of it is the lenders. So in the earlier days, the whole model of the business was really geared toward first-time buyers to allow them to put little money down over a period of time, save to qualify. But that didn't really work because a lot of those first-time buyers wanted to buy with 5% down, and the developers could not entertain that. Their lenders would not entertain such a low investment from their buyers. And the spec investors took over. So the lenders, like the big banks, have changed the criteria to be very stringent that builders need to get 70% sales before they get construction financing. And those sales need to involve 20% total down, if not 25, which is more than certainly a first-time buyer is planning on paying, as well as have virtually rock solid mortgage approvals years in advance
Mm.
before they can get that financing loan to break ground. And in the hot moments throughout our history, you were able to achieve that in a 3 month period of time.
So this
But
isn't government, this is not a governmental red tape bureaucracy issue. It's actually,
the lenders wanting to cover
I
their
didn't know
rear
that.
ends.
Yeah, I didn't know that.
That's a
I
huge
would sort
part
of,
of it.
a lot of people, I probably blaming the wrong people.
Yeah, at the end of the day, we're all slaves to the bank, and they are too. And getting that loan to get underway is imperative. It's how they pay the marketing companies, the realtors that do sales, their staff. They pay everyone out of that financial loan, and that's what gets these things off the ground. And as the bar keeps raising to get that loan, that's a huge element of red tape for developers. And if the banks aren't willing to play ball, perhaps the government can step in somewhere to assist,
Okay.
however they may do that.
Maybe a delicate question. You mentioned pay the realtors. Two-part question. How important is a cooperating agent in the transaction for new construction?
It is actually more important than you'd think because, like most client customer relationships, if someone walks into a sales office unrepresented, that salesperson's client is the developer. They owe you nothing but honesty. There's no fiduciary duties, there's no best interest being looked after. The contracts involved in buying these pre-construction condos are very extensive, 30 plus pages, and in addition, condominium documents that can be hundreds of pages. So even knowing where to begin with something like that, being able to have resale comparatives given to you, because that is one of the biggest gaps we're seeing here, upwards of 30% premiums to buy pre-construction in some cases on comparable resale, helping through the closing portion, which can be tumultuous. You get very little notice. You better have your financing in place. You better be ready to take occupancy, having guidance through that. Also, when the unexpected happens, having a realtor that might actually have a relationship with that builder due to past production to vouch on your behalf. And ultimately, with what you're going to do with the property, be it rent it, resell it, assign it.
So part of that, I think some of those things can be easily remedied with a lawyer and a standard 10-day cooling off period.
Yes.
It's a big chunk to bake into your price to pay somebody to essentially pass the paperwork to a lawyer and tell you whether this is good or bad or what to be aware of. But the other things that you mentioned, I'll tell you what I heard. Experience. Like you don't want somebody, I don't think you want me to help you with a pre-construction purchase.
I'm sure you do your diligence, but many others may
But I'm
not.
missing those three things, which are all experience. Like I'm missing the experience of knowing what to look out for and how to position and the relationship with the builder. All of these things are missing. And it was the reason why I've always avoided pre-construction. I've had clients come to me and they're like, I want to buy pre-construction. I was like, there's the sales office.
Yeah.
I don't want anything to do with it because I'm not bringing anything of value to the table here for you that you can't get by just going to a lawyer.
Unfortunately, not everyone is as honest as you. There were many people that seized the opportunity despite little to no experience to just essentially park themselves in front of a sales office and accompany people in
Do
to
they
get,
really?
oh yeah, it was done. And to the point the market was moving so quick that the developers didn't even do anything about it. So a lot of money was wasted there, but also
Wow.
a
Wow. And they just parked out front.
just handing out business cards. Hey, let me bring you in. I'll give you a discount. Or bring me in, I'll bring me along for your purchase, that kind of thing.
And the
So
developers didn't even care.
they were just printing money at that time.
Okay.
But that as well as 97% of all sales involving a realtor has now baked that commission into their hard cost. And
And it's
a lot
4%, right? Wow.
to make up for the wait for closing, right? Like these transactions take so long to close. If they didn't offer a higher commission, someone would bring their client elsewhere.
Yeah.
So to stay competitive, it got upwards of 5, 6 in some cases.
I think it's interesting because I've had multiple conversations with people that were involved in pre-construction. And now that we're on the other side of the what is now, I think you could classify it as a collapse. There's two very different stories. I hear stories from, I think, people that lack those three important skills, the experience parts, and they are finding themselves in a position where their buyers hate them.
And this is when they're most needed.
And
When
then, but on the other side, I know a couple of very great, like really great pre-construction buyers agents. We met one that we were talking about that one guy in the parking lot
yeah.
who has almost 100% close rate on still now people that are closing now because he guided them and supported them correctly at the beginning.
And it's not just the beginning. There's often years in between the sale, the point of sale and the closing. Are you staying in touch? Are you giving them a heads up when it's time to start looking into locking in an interest rate? Are you bringing them to a resale lawyer who wants to take out his red pen and mark up a contract, knowing that none of that stuff is going to get approved? Like, do you have people that specialize in this, be it mortgage financiers, brokers, lawyers,
Yeah,
property managers? There's lots to provide a client service-wise. There's plenty that do none of this. And
right.
they simply made their money and they've changed their name. And then there's those that are trying to pick up the pieces for those clients that are trying to assign desperately. That's when they're most needed. When this hypothetical scenario arose and became a reality where people are assigning desperately and taking losses, how do you stand out? Having a good realtor from the onset at least established a sense of that realtor owes this service, where if someone went in without one and tried to find a realtor to bail them out in an assignment, good luck. Is that realtor even going to get paid? Like, these are all factors to take into account now. So there's value to it, but I really think the onus is more on the developer to have done more to cultivate their own sales and not allow it to be like a 97% realtor based or driven sales process.
Yeah, you almost think it would have been worthwhile for the developer to have in-house buyer agents that aren't being paid by the developer. And you just say, listen, I think Milburn did the sales side, right? They were
Yes. So
in-house.
I actually worked for them for a period of time. And the way their dynamic works is the in-house staff is paid $500 to $1,000 per sale, but they get volume, like 600 sales throughout the life of the project, whereas the outside agent's getting 4%.
Yeah, when I think about it and you go, listen, rather than offering this like really heavy commission that's ultimately going to get passed on to the buyer, we can have somebody that's not directly affiliated with us. We're going to feed these agents and we're going to handpick these agents that, while it might be, I think, on a negotiation perspective, it might not be in our best interest to have these agents working the buyer side. It is in our best interest that we can have the expense and say, listen, we'll pay you 1.5 or 2% of the deal. You don't work for us.
Yeah, but you also get a monopoly on the business. And they do that often with inventory. I've noticed even in where I live at the developer has units for sale still 2 years after closing, but there's a bunch of listings from other agents that say to be signed on developer forms. So that's an example where they've given these agents the right to try to sell these units,
Okay,
but they're still a property of the developer.
gotcha. Rather than doing it in-house, so
Yeah,
you're putting the onus on those guys to go out and hunt for
who
those.
claim to be masters of the neighborhood, for example, but they still have their in-house staff working away too.
Gotcha.
So they're trying all kinds of things. I think if I have any worry about how these initiatives are going to translate, it's if they're not going far enough, they'll actually be counterproductive because recently the developers have become more generous with their pricing and incentives than they had been. But if they get a whole bunch of news that the government's going to help their business, well, it might restrict how generous they're willing to be right now and be counterproductive. We'll have to see. I have one thing I have noticed is there's already, in some cases, more sales in 2026 at pre-construction sites than all of 2025. And why that is still a bit of a mystery. Perhaps people are tired of waiting to buy into their favorite new project. But certainly around my part of town, there's activity. There are sales taking place. Some of those prices are 20, 30% higher than the resales. So you scratch your head on that a bit, but for some people, it's a lifestyle thing. It's getting a never lived in suite with a warranty. It's getting the location and the new finishes they want.
What makes a developer pick a particular, is there a particular thing that a developer would look at? Like if you wanted to sell the remaining units in a development, what?
Productivity in the neighborhood would be one,
Yeah.
and those who helped the developer move product in the early stages at the highest ratios. So in some cases, one agent or group will sell 200 of the 600 suites in a condo development. That person is going to get the nod.
Okay.
Or the person who is most prevalent already in the neighborhood resale wise.
And would they shy away from somebody like yourself who worked with them and now doesn't?
Probably not. They would have value there too because it's someone who knows both sides, knows the position the developer's in, but also with experience helping the buyers. Something like that would be possibly on the table in the future.
Mm. Yeah, I think it's interesting. You certainly, you've given me a lot of information here that I didn't know. Like I underappreciated. It's interesting because this is what I do, but I underappreciated what a realtor does on the buy side. And I think a lot of people underappreciate really realtors in general
Yeah, I would agree.
because it's not always done well. And it's
That's
like
it.
any industry. Listen, there's probably bad bricklayers out there, and every industry has people that are really good at what they do, and then everybody else.
And that particular industry is quite profound because you would have an agent that just comes in and drinks cappuccino and lets the in-house staff do everything. And then you have the one that's going to take the clients aside and say, this is what they really mean by that. This is a unit that's at a lower price per foot than the average that you should stand to benefit more from. Some are hands-on, some are not.
Yeah.
It's easy to do very little in that profession in the good times, and that's why there's such a bad rap attached to it.
So if you're to give somebody some advice on, let's say there's somebody that's interested in looking at one of these developments that is nearing or has just recently, maybe they got occupancy, but they haven't registered yet. What's the advice from your perspective?
It boils down to the developer, their reputation, and their economic viability, because there are many developers right now that just want to move on. They want to get rid of that inventory. They're fine to take a lower profit margin. They want to move on to the next. They have land they're sitting on. So being able to identify who they are and know how their flexibility internally works. And a bit of a case study would be a couple weekends ago going to visit a sales office around here with a client looking at about 1.5 and willingly showing them 1.6, knowing we're going to knock 100K plus free parking off this price. And having the rep look at me and like, how do you know I can do that? And that's just from internal experience, right? So it's knowing where that is going to be the most lucrative. And there are some builders that have to hold on to every penny on paper to get their next financing loan. And then there's others that can take a bit of a bath to move on to the next for reputation's sake and being able to
Yeah.
analyze that.
I feel like you're like Darth Vader and we've got the mask off. You've come to the light side.
Yeah, it feels good. It's a better side.
Not to say, listen, like I don't think you're necessarily an evil person.
I never was, but I did represent the dark side.
The dark side, which, and again, I think you did a nice job of shining a light. Yes, these guys made a lot of money when times were good, but those margins were still relatively thin. The risk being taken was huge. I wouldn't, I've often actually said, because I've got friends of mine that are developers that are very successful and really built their business at a great time. I would not go back in time and change places with them because the risk that they were running,
The sleepless nights.
the leverage, there was a lot on the table and it could have gone the other way. Like this could have gone the other way. And I'm a big believer in you get rewarded in proportion to the risk that you take. And I'm not that kind of risk taker. I don't think most people are.
No, it's a lot. And especially when it's 10 years in the making. That
Mhm.
is a long time for the world to not take a bit of a turn or for you to maintain non-liquidity
I know a
and
lot of
all
people
that
that don't
money.
even want to wait 2 weeks for their paychecks, let alone
Exactly.
10 years.
Exactly. So it is more complex. And again, when you're talking $300 million condo projects, even a 10% return is a great return. But if a construction quote goes up 30% and levies nearly triple, a big chunk of that has been eaten away. And now, even if there's profit on the table, is it worth tying up money for 7, 8 years when there's so many cash is king opportunities currently on the markets?
So a takeaway that I have is that if you're listening to this recording and you are looking to make a move, it's I think the same as the resale is that there are opportunities out there that the list price isn't necessarily what is the where you land. Almost every single deal that I've done in the last year has involved a haircut of some description.
Yes.
Or with the exception of a few that we listed really low, we I've never had that conversation with a seller where I'm like, "Hey, we just killed it." Like, and most of the time there's some massaging to get these deals signed, even when we are in multiples. And on the buy side, we've been able to give real value and reductions in what that ultimate sale price is. And
Yeah.
that's what if somebody came to me and said, I really want to buy pre-construction, not pre-construction, but a new construction that hasn't yet closed or just closed. Maybe the builder still has inventory. I would want to defer to somebody that really understands where those opportunities are in the first place. It's hard to go fish them out. I wouldn't even know where to begin.
But it's intimidating when you see a builder price at such a premium. But the way their financing agreements work and their investor core works is that they sign off on a bottom line number. We want to sell these units at 1,700 a foot, but they know that's impossible. They can't just reduce that price. It causes too many ripples in their financing to their investors, to their previous purchasers, but they do have a marketing budget to play with.
Mhm.
And that marketing budget can be commission, credits on closing, deposit fluctuation. They can do a lot. They just can't move the sticker price. And knowing that obviously has value.
Yeah, and like again, I wouldn't have even known to start there. It's not my jam. I would argue that on other resales products. So single family detached, I probably have a leg up on you.
I would say it's impossible not to learn with 10 plus years experience in any niche.
Yeah.
And I would say your niche is much broader than mine. But certainly I learned a thing or two in the years I spent in
Yeah.
pre-construction.
Yeah, just a recap here, and we won't drag it out too much longer because we chatted here for I don't even know how long. But I think the takeaway here is that there is some light on the horizon, that the government has realized the errors of some of their ways, that
Yes.
some of the corrections that they made went too far, and they're going to have to pull back on that. And that those wins are going to be more likely realized by future buyers than it is like the developers aren't going to be the winners here.
No. The future buyers will be, and it's a matter of when is that perfect time to come in when it comes to pre-construction. And I think in the next 8, 12 months is going to be that window.
When's the bottom here? Like where do the new developments run out of inventory, do you think? If you were to put it like June 2030? Like when does the inventory run out?
I think it's probably sooner than that. The existing projects that still need to complete, half of them will not go ahead because they weren't viable. They just haven't pulled the plug yet. They're never going to break ground. There has been little to no new starts in the last 2 years. Generally, the life cycle of these projects from the point of sale to completion is 5 to 7 years. So we're already a couple years into this pipeline crisis in the making.
Mm.
So will the market turn around before the crisis hits is a good question. But inevitably, if not before, by 2030, we will have a housing shortage crisis that will only be restrained by how much people are willing to pay. So homeowners will bask in that benefit. How much is that ceiling? Does it just go back to where we were in 2021? Does it exceed that?
I don't think we'll ever see that again, to be honest. I don't think like in our professional lifetimes.
And I tend to agree because of how many wacky factors were impacting that, from the aftermath of COVID to other countries simply wanting their money out of their country and willing to pay almost any price to do. But to get half of the way back there is very realistic, in my opinion.
Yeah, and I know that the country's made a concerted effort to crack down on money laundering, which was a huge issue.
Yeah.
Okay. I think we covered off this topic. I don't even know how long we've talked
For
for.
about an hour, I think.
Oh, look at that. I really appreciate anybody that has taken us all the way to the end here. And I think the end parts, we probably strayed away from the tax issues and the things that are coming here. But for me, one of the most informative things was just really around finding somebody that understands the niche markets that you're looking at. Just like selling real estate in Toronto doesn't necessarily make you an expert in new construction and where those opportunities are for buyers. So thanks for anybody that's listened to us here all the way to the end. I
Thank
got
you.
a lot out of this. I've learned a lot about this, and probably the most interesting, being a real estate agent, I have a new appreciation for the buyer side on pre-con because I always pictured these guys as just extracting a fee for very little work. But I think what I took away from this was probably more work because it gets spread out over a very long period of time. If you've got 50, 60 closings that take 2 years, there's a lot that goes into that, making sure that your buyers are protected all the way through to the finish line. So
Absolutely.
appreciate you really sharing that with me. I was also really surprised that there was like the equivalent of ambulance chasers, just people hanging out in front of the thing, like poaching people.
Sometimes I'd walk out there and try to shoo them away like they were loitering in my parking lot. Get away from here, at least cross the street.
Yeah. Get in your Escalade and go.
Yeah, exactly. It was quite a journey,
That's great.
as it will continue to be. I'm glad to, for a change, be on the teacher side, as you've been a great teacher since joining the Halyard Group.
I'm super glad that you're here because I think you definitely fill a void that was needed within the team. So we're glad to have you.
Glad to be here.
All right.
See you guys soon.